This government overreach where they can stifle ideologically inconvenient dissent, political freedom of speech, by attaching people's insurance policies, by attaching their bank accounts, by attaching their brokerage accounts is absolutely draconian and unwarranted and hasn't occurred in Canadian history, even in times of war. Assuming that the conflict continues or that the conflict promotes nervousness around resource supplies from Russia would revolve around those resources that Russia is a primary producer of. Those include prominently aluminum, nickel, platinum, palladium, phosphate, natural gas, and oil.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY.
Welcome back to Liberty and Finance. We have a returning guest of some renown. Rick Rule is the president and CEO of Rule Investment Media, formerly the CEO of Sprott Asset Management. He's joining us this Monday, February 28th, 2022. Rick, thanks for coming back on Liberty and Finance.
Always a pleasure, Dunagun. Thank you for having me back on.
This might set a record for how recent recurrence of having you on, although I don't think so. Sometimes we were doing some panel interviews fairly close together, but this is fairly recent since your last appearance here. You talked to us in some fairly sharp and pointed terms last time about the travesty of personal property rights that are going on in Canada, and hopefully things will be improving up there. But we also have lots of questions submitted by viewers about jurisdictional risk ongoing, both in Canada and in Russia. We touched on some of those last time with you. We have some additional viewers' questions we want to get to, but we've got to head those two elephants in the room off up at the pass. So if we could first address Canada, it's where a lot of people have metals stored. It's where people have banking savings, that sort of thing. Can you talk to us about what you see unfolding in terms of private property rights or the threats against that in Canada, and what people should be concerned about in their Canadian holdings going forward?
Well, I'm delighted by the extent of the popular outcry in Canada around the Emergency Measures Act. And I'm delighted, too, that the Prime Minister, for whatever reason, decided to declare the emergency over. I think the popular outcry against the emergency measures probably had something to do with his ending it. But I would caution you that, unfortunately, the Emergency Measures Act was popular among many Canadians, particularly those Canadians who would probably be inclined to vote for what I call the consolidated left in Canada, the Liberals, the NDP, the Bloc Québécois, and the Greens. There is a group in politics around the world, on both the right and the left, who believes that the end justifies the means, that don't care so much about the rule of law or normal legal processes. And I think that's unfortunate. What I personally object to in Canada was the fact that there are agreed upon recourses for people who believe that other people are acting illegally, that is to say, the Canadian courts. And traditionally in Canada, the Prime Minister would have availed himself of the court to have the court to declare the unlawful assemblage on public thoroughfares and the blockage of the border illegal. And having obtained that ruling, if he did, he could then ask law enforcement to enforce the order. What he did was very different. He chose to bypass the courts, and for that matter, largely bypass the legislature, and act by executive decree, both in terms of declaring the occupation illegal and also in terms of ending it, but in a much more draconian sense, by attaching financial assets to those who had given support to an action that was, at least at the time that they had given support to it, not illegal. The idea that he used the power of the federal government to use the financial service system to stifle dissent, freedom of speech, from a political rather than a legal point of view is horrifying. Now, predictably, there was outrage and confusion about this around the world. It should be noted that his order, at least as it was stated, applied to those who had supported the truckers' convoy. And I got, 30 500 emails from Americans saying, "Are my Canadian assets safe?" Well, pursuant to the order, if you weren't among the people who supported the trucker, the answer in that context was yes. Looking further down the road, of course, this draconian adventure into private property rights is something that people need to be concerned about, not just in Canada, but around the world. People asked me too, because of my large shareholdings in Sprott, whether the Canadian government was in a position to gather those assets. And I want to say that while I'm horrified about the long-term implications of the Prime Minister's Act, the actions that he took would not have applied to Sprott assets. First of all, the individual shareholders don't technically own the assets in the vault at the Royal Canadian Mint. They're owned by the trust. And what the Prime Minister would had to have done is to affect his scheme extraterritorially, which is to say seize the shareholdings of those people who held shares in the Sprott Physical Trust through the facilities of the New York Stock Exchange Clearing Corporation. That seems to me to be a stretch too far. That isn't to say that people shouldn't be concerned about this type of imperial overreach by the government of Canada. And it also means, I think, that Canadian citizens should continue to put pressure on their members of parliament, irrespective of the political stripe of that member of parliament, to protect their private property rights. This government overreach, where they can stifle ideologically inconvenient dissent, political freedom of speech, by attaching people's insurance policies, by attaching their bank accounts, by attaching their brokerage accounts, is absolutely draconian and unwarranted and hasn't occurred in Canadian history, even in times of war. That isn't to say that there aren't some shameful episodes in the history of the United States and Canada in times of war with regards to individual liberty. One might look at the internment of Japanese Americans and Japanese Canadians as other examples of government overreach. But this type of overreach in times of peace is, at least in terms of my memory, without parallel. And it needs to be resisted. I can I can only say as a side note, Dunagun, I wish Battle Bank was up and had its charter with Canadian dollar denominated accounts so that Canadians could open Canadian dollar accounts in the United States. We probably would have raised $1 billion in deposits, but too little too late, I guess.
That's your banking entrepreneur adventure that we're going to hear about probably at the end. We heard through Martin Armstrong the story that it was actually the Canadian banks pleading with Trudeau to end the Emergency Powers Act because of a rush to the exits of significant accounts and outflows of cash and currency and accounts from Canadian banks. I don't have any confirmation of that. Do you have any confirmation that there was actually an appeal by Canadian banks to end this because of an exodus?
I'm certain that there was appeals by Canadian banks, but I don't think the exodus was sufficient that in and of itself would have caused a change in policy. The policy was deeply unpopular among Canadians, many of whom, in good conscience, vote Liberal. And I think it was a convergence of factors that caused the political risks associated with the action to exceed the political rewards that might otherwise have accrued to the Prime Minister.
You made the distinction before about people who have metals in storage in Canada, that's not necessarily part of the banking system. You made that distinction. Do you think that's a significant distinction that people should apply a different risk estimate to funds held in Canadian banks versus bullion held in Canadian depositories in the light of these events?
At present, yes. I think it was an oversight on the Prime Minister's part. I don't think that he deliberately exempted bullion holders. I think it's such a small asset class relative to what he could otherwise steal that he didn't bother with it. And I suspect as they have time to review their techniques, if they decide to employ this again, that they'll address that oversight. For the time being, the asset class, which is to say bullion held by Canadians in independent storage, is such a small asset class that it wasn't worth his going after. I don't think it exhibited any goodwill on his part towards gold. I just think it was a simple mistake, one of many.
I guess the question was more about whether the banking system itself versus non-banking private depositories makes a difference from a government overreach standpoint, in your view.
I think not at all. I think the banks have more power than the vaults. So I think ultimately, if they correct that mistake, that the banks will have more recourse to public opinion and more recourse to political power than the independent storage community will.
There's also significant concern being expressed surrounding the geopolitical stresses and actions going on between Russia and Ukraine. People are looking at that for investment risk. Again, I'm just restating what we said before. In our last interview, you've talked with us several times about jurisdictional risk, about how there's risk in all jurisdictions. We have a specific question about this from Tangerine Travels, who says, Rick has stated he thought Russian resource stocks provided the best value in the sector, and has also stated that he's holding a lot of cash, so he would have the courage and ability to scoop up cheap shares in the event of a market crash. So, my question is, did he have the courage and conviction to scoop up lots of cheap Russian shares? His favorite Russian companies such as Gazprom, Lukoil, Polymetal, and Norilsk Nickel are down more than 50% in the past few days, et cetera, et cetera.
I am, in fact, buying more Russian stocks. I'll say that I'm doing it with trepidation for two reasons. One reason is economic, which is to say, if the Russians are thrown out of the SWIFT system, will the Russians have the ability to pay me my dividends, the dividends being an important part of the yield on Russian stocks? Similarly, will the British government delist the Russian stocks from the London Stock Exchange? And finally, will the U.S. government, through their own sanctions, forbade me from owning Russian stocks? So there's a lot of political risk. There's Russian risk, there's British risk, and there's U.S. risk. The second question is moral. Do I want to indirectly aid the Russian economy? This is not a political consideration. It's something that has bothered me for years about owning stocks in many jurisdictions, the U.S. among them. When I object, as I do, to the policies of the U.S. government, how do I feel about subsidizing the U.S. government by paying taxes on my dividends and capital gains to the U.S. government? Political risk and moral risk is where you find it. And I need to say that these are issues that I'm still grappling with. I believed before the incursion that the Russian stocks were the cheapest big natural resource stocks in the world, and they are now on a 50% off sale. I am taking advantage of that, knowing full well the risk. There is an investment case to be made for Russian stocks, and there is a speculative case to be made for Russian stocks. But viewers to this interview that don't have the courage of their convictions and don't have either the psychological or the fiscal resources to stand this risk should really get out of the way. If all of my Russian stocks went to zero, make no mistake, it would bother me psychologically, but it wouldn't change my decision as to what to have for breakfast. When I look at companies like Gazprom, if you set aside the moral objections to owning Gazprom, which I believe are real, this is a world-scale company that has, I'm not saying it's going to, but could be a 10-bagger in 5 years. The idea that you can buy what could be a 10-bagger with a 5% or 6% dividend is an unbelievable set of circumstances if you view it simply from an investment or a speculative lens.
We've also had concern expressed from viewers about what they're anticipating with this sort of combination of factors that are leading to what seem to be more and more volatile markets, more and more climatic disruptive things happening, about a potential effect on markets in general, savings, etc., and nations. Cleta Smith asks, what will happen to countries and their citizens when the crash comes and it's discovered which country has no gold reserves? And there are probably multiple in that category.
Well, I think that gold isn't the only asset class that's going to matter. Ironically, right now, the asset class that matters is U.S. dollars, because that's the world's reserve currency. The Russians have noted that they might not have access to U.S. dollars, so as a consequence, they've hoarded gold. For them, it's a second best alternative, being outside the SWIFT system. The gentleman says when, with regards to a worldwide crash. I think he needs to preface it with if, because there's no necessity that we have a crash. I'm not saying that there isn't some possibility or perhaps even a probability that we have a precipitous decline, which in his view might serve as a crash. By precipitous decline, I'm talking about a synchronous decline in equity prices worldwide of 50%, which I think is not unlikely. That isn't a crash. We've been through that a few times before. It is extremely unpleasant. It is severe, but it's survivable. And when you look back at that circumstance 10 years hence, what you figure out is that it actually didn't make very much difference over the course of a decade. Of course, it makes a difference to you at the time. A real crash, which is to say a crash where nations become functionally insolvent, is an entirely different set of circumstances. And I'm not suggesting that that couldn't occur, but I think it's unlikely in the near term to occur. I would also caution the gentleman one more time not to view gold as the only asset class in the next 10 years or 15 years that's going to make a difference in terms of national sovereignty. Remember that the total market capitalization of gold on a global basis, gold and silver on a global basis, is something like 10 or 12 trillion dollars. In a world where the stated value of every savings and investment asset class available to government and savers worldwide is $650 trillion. It's easy to overstate the importance of gold and silver in global commerce and power.
Well, I'm going to take the bait, and since you look at a lot of natural resource sectors and other types of things, could you give us some clues beyond gold, what you think are significant asset classes that people need to be aware of that you think will persist?
Well, certainly if the world decides that they need to take stronger action against Russia, the easiest place to do that is with energy. Similarly, if Putin has the courage, the easiest place to punish the West for sanctions would be energy. And any disruption of the European energy market by the Russians, both oil and gas, would be extraordinarily bullish for non-Russian oil and gas producers. I note today, too, that Germany has decided to review the shutdown of its nuclear fleet. The idea that Northern Europe can exist without Russian gas in the winter means that they're going to need lots and lots and lots of nuclear power. So the immediate beneficiaries that I see to this, assuming that the conflict continues or that the conflict promotes nervousness around resource supplies from Russia, would revolve around those resources that Russia is a primary producer of. Those include prominently aluminum, nickel, platinum, palladium, phosphate, natural gas, and oil. And one could expect non-Russian domiciled producers, competitive producers of all of those substances to do well. One could also expect the energy shortages that appeared in Northern Europe before this crisis, but exacerbated by this crisis, to mean that the popular European abhorrence around uranium will need to be rethought.
On the topic back of silver and gold that we were speaking of moments ago, there's questions about, in the event of these geopolitical events, some people were expecting different reactions from the metals market than what they saw. Pablo Safarian says, what could be an explanation that silver goes down from 25.5 and in one day drops below to 24 during the start of a war? Who could be selling?
In my experience, geopolitical factors have been a very small factor in the performance of gold and silver prices. Gold and silver, physical gold and silver, are important to people who are facing immediate political risk themselves, because they can use physical gold and silver as a medium of exchange to ameliorate some of the financial difficulties they might find with their bank. But the impact of geopolitical risk and concern over geopolitical risk on precious metals prices has been, in my 45 years of investing, overstated. Precious metals prices do well when investors on a global basis are concerned about the maintenance of purchasing power in large, stable currencies, which is to say, problems around the ruble are much less important for gold and silver than problems around the US dollar, because the ruble as a currency is a tier 2 currency. It's a global afterthought, while the US dollar is the denominator in world trade. I would say in the near term that there is a risk to the gold price from geopolitics. simply because gold is one of the few asset classes that the Russians have that they can sell in return for what they might need to run their economy during the winter or prosecute the war. I think there may be more downside risk to precious metals from geopolitics than upside potential.
We have a number of questions here about mine nationalization concerns on the increase or not. And it's not just in one jurisdiction, it's all over, but they are talking about Canada, Russia, but a lot of other places. Can you talk to us about whether you believe that the risk or the potential of governments nationalizing mines is increasing in the light of recent events?
I think creeping nationalization is a certainty. I don't think that you're going to see too much by way of overt nationalization. The government's tried that in the 80s and 90s, and government track record in terms of mine operation is unblemished by success. One would look at Zambia, where the Zambians stole the nation's mining industry, and as a consequence of that, nearly went bankrupt. What you are seeing and will seeing is creeping nationalization, increasing regulation, increasingly difficult permitting, increasing social rents by way of taxes, offsite expenses, and royalties. Chile, as an example, is proposing to increase the state's stake in the mining industry fourfold. While it isn't overt nationalization, it's covert nationalization. And the United States isn't immune to that. An example would be the Resolution copper deposit in Arizona, which was discovered 20 years ago and is no closer to permitting than it was 20 years ago. It will probably be another 10 or 15 years before that deposit is permitted and built. If you think about the impact of the net present value on the owners of the Resolution deposit, where their access to cash is denied them for 25 years, assuming a 5% discount, what it means is that the entire net present value of the deposit has been stolen by the U.S. government. We don't call it nationalization, except that it's nationalization. For partisan political purposes, one of the best copper deposits in the world, 1 billion tons at 1.5% copper, conveniently located next to a copper mine. That is to say, absolutely wonderful infrastructure with a wonderful copper market operated by the two biggest copper companies in the world. Production from that, the benefit from that will be consumers and, frankly, copper consumers will be deprived of that benefit for, say, 25 years. And yet we say there's no nationalization, there's no political risk. A different example would be the copper nickel deposits up in the northern part of the Shield, which have had their permits pulled as a consequence of the fact that they are close to the Boundary Waters Reserve. They're not in the reserve, they're just close to the reserve. So the idea that this nationalization, or at least the threat of nationalization, and the threat thereby is going to occur in Russia or Mongolia or Argentina or Congo, while true, disguises the real problem. The most dangerous government to any investor I know of is that government which is closest to him. So if you're concerned about political risk and you're a Canadian, look at your government. If you're a resource investor and you're American, look at your government. Yes, of course, be nervous of the Congolese if you have large investments in the Congo. But I'm always curious as to people who ask me questions about emerging market and frontier nationalization when they don't own any emerging and frontier market stocks, and where their portfolio is dominated by the United States and Canada, where there is very, very, very understated but very, very real political risk from taxation, royalties, regulation, and contingent expenditures.
You mentioned earlier the possibility of delisting of companies as one of the risks if governments try to impose sanctions of various kinds. That question comes up about a number of different jurisdictions here. Michael Lim asks, what is the likelihood of Russian companies being delisted from the London Exchange? That's a very specific question. But the principle that another viewer asked about the same thing is, if a company is delisted from an exchange, does that mean its value from the stockholder standpoint goes to zero or not?
The value doesn't go to zero, but the price gets impacted. Many investors conflate the term price and value. They are very, very, very different terms. The impact on the value of the free cash flow from a Russian company that's delisted from the London Exchange is zero. It has no impact whatsoever. It can scare the hell out of the shareholder, and it can make the shareholder's life inconvenient. It can lead to circumstances where there are more sellers than buyers, and so the price goes down. It does not impact the value. People should know, too, that this isn't Russian political risk. The Russians aren't going to make application to the London Stock Exchange to delist Russian stocks. This will be the British response to a Russian action. This is political risk that stems, as inconveniently as this might be to people's psyche, from their own government, not from a foreign government. Whether or not you agree with the policy decisions is a different question.
Over the years, you've talked to us many times about this point of the difference between the price of something and the value of something, and usually you conclude by saying people who can understand the value of something, which few do, get excited when the price of something that they see as valuable goes down. As an investor in a company, if that company, heaven forbid, were to be delisted and suddenly were significantly reduced in price, would that get you excited as an investor who still believed in the value of that company?
Yes. Yeah, absolutely. It's odd that at age 69, I have more patience than I had in my 20s and 30s. But I learned investing in Congo during the Civil War, when 2 million people killed each other on top of the copper deposits, that the copper was blissfully unaware and uncaring about the stupidity of the people on top. And when the war was over, the copper was still there, while it was trying for me financially, and while it was trying for me psychologically to be invested in a circumstance where people who were indirectly my employees ran the risks of being killed. The truth is that from an economic point of view, it was the right thing to do, return relative to risk. If, as an example, Gazprom were delisted on a global basis, there's two outcomes. One is that it would never come back, and the other is that it would come back. And you need to assess your tolerance to the risk more than you need to assess the risk, because there's so many variables in the risk that my suggestion is that it's unknowable. And spending time trying to know the unknowable, while it's amusing, is probably not very valuable.
This one is a really different question, but I think you might enjoy it. And it has to do with life perspective. You just brought that up. You have a different perspective now than you did when you were 20. Roscoe PCO says, what would you do if you were 30 years old now?
Oh, this is embarrassing. I would be in the insurance underwriting business. I'm fascinated with the concept of risk, and I'm a contrarian. And the idea that I could take and assess risks on both part of the balance sheet, which is to say the asset side and the liability side, and take advantage as a contrarian, not only in terms of equity market cycles, but rather in terms of reinsurance pricing, means that I would almost certainly be an insurance underwriter. I remember coming onto this slowly, looking at the Berkshire Hathaway annual report, and understanding that because Mr. Buffett was in the long-tail reinsurance business, and because he could set policy loss reserves at almost any level he wanted to, that he was taxed at an effective 11% rate. Being a prior taxpayer appealed to me. As I came to learn more about the insurance business, I remember in the aftermath of the Katrina storm in the Gulf of Mexico, where there were big claims against energy underwriters, that the premiums paid for offshore supercatastrophe insurance in the oil and gas business in the Gulf of Mexico went up by 500%, when the risk didn't go up at all. So the idea that I could take advantage of illogical pricing, both as an underwriter, but also as an investor, given my own psychological makeup, is that I almost certainly, if I knew then what I know now, would have gone into the insurance business, probably around natural resources, because I like capital-intensive cyclical businesses. But I probably would have been in the insurance side of that business rather than the other side.
Well, I'm not sure you're going to get a lot of followers there, so that probably demonstrates your lifelong contrarianism is still well intact. You've got some upcoming boot camps to help people who do want to learn from your decades of experience. And could you update us on what the topics of those boot camps will be and when the first one will be available?
Well, I'm so excited about this, Dunagun. I really, really, really am. The first boot camp is the Uranium boot camp. longtime listeners to Dunagun Kaiser, particularly Dunagun Kaiser's interview with me, will know that I was wildly optimistic about the uranium business 3 years ago, became less optimistic about it when the share prices of uranium companies, at least the juniors, went up by 400%. Now that those company share prices have declined by, in some cases, 50 or 60%, at the same time that the timelines necessary for the resumption of the bull market in uranium have shortened, means that this Uranium Investors Bootcamp is a uniquely timed event. I believe over the next 2 or 3 years that the price of uranium will increase from its current $43, $44 to something like $75 or $80. I believe that a well-chosen package of uranium equities will have escalations that will substantially outpace the increase in the uranium price. But most importantly, I think that the catalyst is in place for this to happen now. You'll recall 3 years ago that my objection to my thesis was I didn't know when it was going to occur. Several factors have come into play. One being the extraordinarily successful introduction of the Sprott Physical Uranium Trust, which has raised, $1.2 billion, $1.3 billion, and taken 23 or 24 million pounds of material off the spot market, tightening the spot market very substantially all by itself. More importantly, I suspect, the realization that we can't have economic growth around the world without many forms of energy, including clean energy, means that particularly in Japan, the pace of Japanese restarts is increasing. Japan, pre-Fukushima, had the second largest nuclear fleet in the world. As I understand it, they have 10 or 11 plants restarted, but they have 18 in for permitting. This will do two things. It will take inventory which is currently held as being for sale and make it inventory held for fuel, and it will increase total consumption of fuel by 10 or 12 million pounds a year in 2021, not sometime in the distant future. Finally, of course, the renewed interest in the Kyoto protocols and the threat to European fuel security by Russia has meant that the decisions throughout Europe to de-emphasize nuclear are being rethought. You will see very recently the French have decided to double down on nuclear, and I suspect that the French builds, even in the event that Germany doesn't build them, means that there will be increased indirect consumption of nuclear power in Germany. They'll simply buy electricity made in France from nuclear plants. So for all these reasons, I'm very bullish about uranium. And uranium is a subject that most people don't know about. Dunagun, as you know, I've graded thousands and thousands and thousands of mining stock portfolios over the last 2 years. Between 7,000 or 8,000 of those had substantial holdings in uranium. And it was very obvious for me, looking at those portfolios, while the investors might be getting the big pictures wrong, in other words, where their strategy might be right, their tactics were horrific. And I really, really, really look forward to being able to help a group of investors who are forward-thinking enough to be in a sector that was, until recently, regarded as a pariah, where the outcome is, by my point of view, almost a certainty, where all people need to do is change their perspective and change their knowledge. As an example, we will have an overview of the uranium market presented by WMC Mining. They did this presentation for the board of directors of Sprott, and it was the single best presentation for a lay audience around uranium that I've ever seen. We'll have a great discussion about the politics of uranium, and uranium is nothing if not political. We'll have a Chinese parastatal, China General Nuclear, talking about the Chinese outlook for uranium. We'll have Kazatomprom, the largest, lowest cost producer in the world, talking about the structure of the uranium market globally. We'll have Cameco, the largest market cap uranium company in the world, talking about the market dynamics in Canada and the United States. We will have analysts who are talking about uranium who have been in the space for 20 or 30 years. Too often online, the experts are people that until 2 years ago couldn't spell uranium. Most importantly, probably, a money-back guarantee. I'm going to take 8 hours of your life. By the way, you don't have to listen to it on March 19th. You can listen to it afterwards. The information won't be stale dated on March 21st, I guarantee you. It's going to cost you $99 to attend, and if you attend, not if you don't attend, if you attend and you don't think that you got your $99 worth, email me and I'll give you your money back. The financial risk is mine.
You mentioned, and there'll be a link to people who want to find out more about that in the description of this video. People don't fail to check that out. You mentioned in passing grading people's investment portfolios. Two questions about that. One, we've been approached by newbie investors to the resource space who say if they don't have an existing portfolio to send you, but they still want to find out what some top recommendations are, is there a way they have to make up a pretend portfolio and submit that, or how can they find out reasonable companies to start with?
I am not at present making investment recommendations to other people, not because I don't know good companies. I do. It's because my perspective is different than their perspective. I don't know enough about their needs. I don't know enough about their means. I don't know enough about their time frames. I don't know enough about their risk tolerance. I am considering, against my better judgment, beginning to publish a subscription-based service that might do that. The idea that I would want to confuse my life at age 69 when I'm allegedly in contented retirement is odd, but I do note the need for an information product around mining. And I, in all humility, at age 69, don't know anybody who could do it better than me. The idea that I could do it well doesn't necessarily convey on me the obligation to do it. And I'm wrestling with this because I'm very contented right now in retirement, working hard for no financial reward.
The other question we were asked by people who have tried submitting rankings requests for their natural resource portfolio is the turnaround time, sometimes in months. In the past, you've said that it used to be a lot of months, and then you got an improved process. What's your average turnaround time people should expect if they do submit a request?
Right now, we're about 2.5 weeks behind, I think. Last week we got buried. I guess maybe it was the Russian circumstance, but a lot of people, we had some days 250 requests a day, and I'm not capable of responding to 250 requests a day. Worked hard all weekend, cleared some of the backlog, but I suspect we're probably 2 weeks behind.
So if people want to get your ranking of their natural resource investment portfolio, how can they get it?
Go to ruleinvestmentmedia.com. Enter your natural resource stocks there. Note that the group of us follows 800 stocks. There are 2,000 of them. So you may see no opinion, which simply means I have no opinion. Doesn't mean it's a bad stock or a good stock. It means I have no opinion. I will, if I think my comments have value, comment on your individual stocks. Note that they're ranked 1 through 10, 1 being best, 10 being worst. Note 3 more things, too. If you mention in the question and comment section the word charts, I will send you 2 charts, the Barron's Gold Mining Index, which is, I think, the best pictorial way to study precious metals bull markets going back 60 years, and also the Goldman Sachs commodity chart, which talks about how cheap commodities are relative to other asset classes going back 110 years. 2 commercial announcements while we're at that. If you care, and if you are accredited within the legal meaning of the phrase, if you mention placements, I've learned that because I'm no longer securities licensed, I can tell you what private placements I'm getting into. I can do this because I'm not soliciting, because I'm not getting paid. So if you care about what placements I'm getting into, by the way, the fact that I got in doesn't mean you can get in, doesn't mean you can't either. Write placements in the question and comment bar. Finally, as Dunagun mentioned, I'm backing the team that has restarted Everbank. In other words, a group of us are forming a new bank, an old-fashioned bank, one that has money in it, one that loans against real security, one that doesn't trade in derivatives. If you care either as a depositor or a borrower, particularly around the precious metals asset class, about this bank information, note it's not open for business now. You can include in the question and comments line bank, and I'll keep you up to speed on our new bank, Battle Bank.
Well, Rick, we'll also put a link to that in the description of this video so people can take advantage of your portfolio ranking. And as always, just grateful for your presence here on Liberty and Finance, and look forward to our next visit together. Folks, thanks for submitting, as you always do, many questions ahead of Rick's arrival here. And Rick, thank you for joining us on Liberty and Finance.
Dunagun, thanks as always. This was, as you say, a real propitious time to do an interview, so I hope it's useful to people. It was certainly fun to do.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunagun, call 1-888-81-LIBERTY. That's 1-888-815-4237.